All right, hey traders, TG Watkins here. Let's see, it is May 3rd. Today is FOMC day, so we've got that as the exciting bit going on today. And yeah, thanks Mirza, appreciate it. Looks like we are good to go and on Facebook and YouTube and all that kind of stuff. All right, so yeah, just remember Moxie Indicator Mastery if you guys are interested in how I trade the markets, anything else like that, come over. We got a $7 trial for 30 days, and yeah, I've been seeing some new faces in the chat room, so good to see you guys. All right. Yeah, what do we got? We got FOMC today. So, markets just kind of hanging out today, not doing too much. The earlier part of the week has been crazy, so that's been a thing for sure. Let's see, we pretty much, some of the stuff that we saw in through here, we were looking for the market to pull back right about there. We got the, negative divergence, we got the Moxie price trigger, all that kind of stuff. And if we look here on the 15-minute time frame, we have what I call inverse trampoline moves. It's when price is over the 50 SMA, but the Moxie indicator is below 0. So we got two of those on the 15-minute time frame, and that worked out very nicely. Then we got basically one big day to the downside right there. And then I think Microsoft came out with earnings, couldn't really do too much to help the market right there. And then, some people are saying that actually it was the Meta earnings are what triggered this, whatever we want to call it. But basically, we went long right there and nailed it. That was perfect. That was the dip. That was a viable dip, and just shot up. that was a huge day. So I was telling all the Moxie traders, kind of come in here. I was looking for price to head up to about the hourly 50, maybe a little bit beyond it. And it went there in one day. I figured it would have taken 2 days, and it actually took only one day, which is just really impressive. So big move like that. We turned around and then shorted it, and our first piece, well, it was a little early. The market just kept going. I'll show you the IWM and what that looked like because that one actually did what I was expecting it to do. But the SPY just kept pushing. In fact, you can see here it made relatively new highs. I'm not saying like total new highs, but from the last peak that it had 2 weeks ago, it made new highs there. So yeah, that was really impressive. And then let's see, on Monday we added a second piece short. So we went long the SPXS, and we did that because, well, leading up to FOMC, I figured people were going to be taking risk off, and the market would pull back, something like that. Plus, we saw the internals. The internals were just not strong at all. And I was like, okay, I think this is the day. So we added a second piece in through here, and then by the end of the day, the 8 had crossed below the 21, and price was sitting right on the 15-minute 50. And then yesterday, got a big move down. I mean, that was another impressive thing. I mean, to have the market move basically straight up like that and then straight down like that, I mean, it has been literally a wild roller coaster for the last week or so as this all happens. But then, funny enough, where do we end up? Right back where we all were, right back where we began. So it's kind of the name of the game for the entire market. This thing has just been mostly sideways. And so now we have FOMC. And I think that's the question is where do we go from here? Part of me thinks that if the market's going to go down, my initial target is about 390. Just kind of eyeballing it, and then you look at the line, and yeah, it seems to make sense. It's kind of like what the market's been doing. Every time it kind of comes down, makes a decent move. So as I said, just kind of eyeballing that. Now it could be crazy. Maybe the market goes up, and we'll just have to see if it goes up. Can it actually break out? Can it sustain? Because we know that the breadth is really pretty bad. I mean, the market has basically been going up on very few stocks. Like 7 stocks have basically kept the market up, and so that's kind of what we're looking at, is saying we need more participation in order to get this market to go higher. Plus, now we're seeing banks start to fail. Where the JOLTS report came out and said, I think it was the lowest job openings in 2 years. I think that was it. And that might have been part of what made the market go down like so strongly yesterday. I mean, just literally straight down like that. So now we've bounced, and we were talking about this right up into the 15-minute 50. So I mean, from a technical standpoint, this is all working out pretty well as far as our levels and our pivots, and just trying just trying to chase this market, really. In fact, you guys, when I was just showing you this inverse trampoline move on the 15-minute right here, so price should not be over the 50 if the Moxie indicator is below 0. That was the other reason that we shorted this, because price was over the hourly 50 and the Moxie indicator was below 0. So that one's worked out pretty nicely. Now let me show you IWM so you guys can see what it was that I was looking for the SPY to do. And then, really anybody out there on Facebook, YouTube, let me know if you guys have any questions. I can see you tuned in there. So, today's going to be a pretty quiet day. Markets just, as I said, it's been a wild week. And then we have FOMC. So a lot of people are just going to be laying low today and seeing what happens. But going back here to the IWM, and if you look here, when the IWM hit the third ATR right up there, that is when it reversed. And that's part of the reason why I went short on the SPY last week when it got to there. Now, obviously, it kept pushing, so then we added a second piece, and then they both turned into winners when the market just collapsed. But that's what I was looking for. That's why I was like, okay, that should be the upper boundary. Very similar to the lower boundary, upper boundary, and again, look at that lower boundary. So, it's just been ping-ponging back and forth between those ATR bars. So very, very, very crazy stuff. Now, if we zoom out a little bit, let me see which one is, there we go. And looking at the IWM, I've been hesitant to really say anything, short for the IWM, mostly because it's done just it has done a really, really good job holding 170 for a year. I don't know if anybody out there has looked at this, but right here, what do we got? It's May 10th, 2022, right there, okay? And here we are, May 3rd. It has been going sideways for a year. So, yeah, that is the kind of market that we have been in and dealing with, and the S&P's kind of done the same. Now, one thing I was kind of thinking about it is if you look here, we also had the market start going sideways starting about, I think it was like to the day, February 15th. I remember that was when all of our stops got hit basically within a day or two of each other, and then the market completely changed after that. So we were right on the cutting edge of that crazy market run that was basically this thing where we're just seeing crazy, crazy moves. It was a fun time. But yeah, to the day, February 15th, all my stops got hit, and then the market just changed after that. But if we notice this, that was going sideways basically while the rest of the market was moving up, and then once we had that false breakout and then breakdown, that again was the start of the market coming down. So I'm kind of looking at this thinking, hey, we've been going sideways for quite some time. Are we about to do something different? So let's see. This went sideways March 2021, and not quite a year. A little bit less, less than a year for that one. But this one's been a year. Now, hey, if this thing starts breaking up and we start going up, then sure, the market's going to go up. I would love to see better participation, better breadth out there, and we'll have to see if, for whatever reason, whatever the Fed says, if the market loves it. Maybe. Now, I will say, let me just put it out there and caution a little bit, because the talk about interest rates and pausing interest rates, which really seems like what the market is chomping at the bit for. It would love interest rates to stop going up and even go down at some point. However, history says that the yield curve inversion and interest rates tend to, uninvert and then go down, usually when there are problems, right? Recession, the Fed needs to fix something, fix the economy, stimulate, all that kind of stuff. So yes, that's what they want, but if that happens, then it's happening for bad reasons because the economy is kind of going down the hole. So we have this weird push-pull that we have to be looking at and thinking, okay, which way is the market going to go with this? So if it happens to go up, so this is kind of where I'm cautioning. If the market happens to go up based on what the Fed says, let's say something about pausing rate hikes, or we're going to take a wait and see approach, something like that. If it goes up, I just want to be careful that it could be a sugar high. And kind of the reason I'm thinking about this is because if you look here, back at 2021, at the end of 2021, when the IWM had this big move up. Now, we didn't catch it. I was actually looking for the pullback, and the pullback never stopped pulling back, so there was no trade. So I'm happy we missed it. But if the market goes up because of that interest rate news. We got to make sure that it's legitimate, because otherwise it could just, as I said, be like a sugar high. Like, oh, okay, interest rates, they're going to stop raising interest rates. Yay, let's go up. And then reality might sink in to where, oh, that's a bad reason. And it's because numbers are bad or the economy's bad or something like that. And we're going into recession, all that kind of stuff. And so, we just need to make sure that we don't get some sort of false breakout like that. And we go like all long only to have it totally fail on us. So I just keep thinking about that, and I just want to see where the market's going to go with this. Now, if the market really follows the technical analysis really well and actually keeps doing what the charts look like it's going to do, then I got to admit the IWM looks like it's just about ready to break lower, break out of this range to the downside. So even though we've had this trend line that price has been holding pretty well, and we'll have to see, can it continue to hold and go up, or is it going to finally break back below it? If it breaks back below it, then what I'm looking at is it really does look like the IWM is flagging sideways, a bear flag, into a downtrending daily 50 with the Moxie indicator below zero. So that is what I'm watching, and yeah, if it stands right here, it looks like that wants to break lower. Now, I've kind of pointed out before that it has managed to cross over a downtrending daily 50 3 other times, even 4 for a little bit, but until it broke back down. But each of those times, look what the Moxie indicator did. It went green and got over zero. This does not look healthy. So unless this changes based on the news today and really follows through, that's not looking great. And so these are the kind of things that I was communicating to the Moxie traders and everybody yesterday, and just saying, look, this is really starting to look different, and different to the downside. But we'll have to see if that actually continues and follows through. So those are my ideas. Let me just put one more thing out there in your brains in case this actually becomes a thing. So I am pretty much like ready to go to trade the UVXY long, which means the market down. And I'm gonna be watching this and seeing if this is a legit thing, because the UVXY can be kind of tricky. But what we're seeing here is price down and the Moxie indicator up. That is a potential trampoline move. Price should not be below the 50 if the Moxie indicator is above zero. And if this works, and again, I'm going to be kind of cautious on this, but if this works, that implies a fairly big move. So yeah, we're gonna see if that actually turns into something. So keep your eyes on it. All right. Yeah, MVS, let's see, Walmart. Losing strength. Well, it's been doing okay, I got to say. It actually has been pretty impressive. If we look at Walmart big picture on the monthly and weekly, what it's done, bounced off the monthly 10. And what it's done here, bounced off the weekly 50 as the Moxie indicator went above zero. So right now it looks fine. It's actually holding these moving averages, doing well. Now, to your point where you're saying it's losing strength, for now, the only thing I can say is it's probably too high. It got a little overbought, and you should be probably expecting some sort of flag or maybe a pullback. Now, based on what I'm seeing, those pullbacks at this point should be into strength, should be into support, but just saying you should be expecting it. And the reason I'm looking at that is because price is pretty elevated here on the weekly chart, and it's also fairly elevated here on the monthly chart. And then you could also see right here that it's pretty much right at resistance. So the question is, can it eventually break up and over through there? We're talking about recession. Walmart, though, might actually be a good recession name because, well, people still have to buy groceries, still have to buy things, and Walmart is cheap. And so the people go there for good deals. But yeah, like right here for that, it looks like it's just kind of running into some resistance. So yes, and you can see here, there you go, there's your negative divergence, and then there's your Moxie price trigger. So yeah, it does look like this thing needs to chill out for a little bit. I'm not sure I would short it. It is technically in an uptrend, and I don't really like to short things that are just basically going to pull back, because you're kind of going counter trend. If you're trying to short an uptrend just because you think there's going to be a pullback, yeah, that can be pretty tough, because they don't have to go down. They can go sideways to fix their overbought condition. So, I'm looking at price kind of coming into the daily 21. The hourly 200 is also coming up. Those are generally support areas. So really until they break, I wouldn't really want to short that. There is a gap between price and the daily 50. So, maybe if it really wanted to move down, it could pull all the way back down to the daily 50. But for right now, I'd really more just consider this a flag. If you look at something, totally unrelated, but from a chart standpoint, look at GDX. For now, GDX has also bounced off of its daily 21 and also bounced off of its hourly 200. So that's why I'm saying for Walmart, I wouldn't even be looking short it yet. And mostly I would be looking at trying to figure out, can it keep going up? But I would just say overall, if it is going to kind of lose some strength right here, right now, I'd say it's pretty much resting. And I would kind of be looking for it to continue higher at some point. We just have to kind of figure out when and where that is. So yeah, and GDX, again, I don't really want to be taking too much, too many positions going into FOMC today. GDX gold is definitely one of those that I don't want to, because GDX and gold, precious metals in general, they really move. They go crazy oftentimes with the FOMC, and it's really hard to tell ultimately where they're going to go. So I just kind of let that event go by, see what kind of craziness happens, and then see if we can kind of pick a direction. But for now, yeah, it looks like they're doing pretty well. I would like to see, probably the next situation, I'd like to see price engage with the hourly 50, kind of like that. So I think that there's going to be another opportunity to get into GDX if it's going to keep going up. So that's kind of one thing I'm looking at. Now, yesterday, talking to the Moxie traders and everything, one of the things I was thinking about is, okay, so this market is up. The market's doing all right. SPY's kind of been, drifting up. It is at a resistance area, right there, previous high. The NASDAQ doing the same thing. It's been going up. It's kind of at another double top situation. Let's look at a little possibly weak right here. And so what I was thinking is, okay, what are the 5, 6, 7 names that are holding the market up right now, and how do they look? So let's kind of take a look around. The strongest has been Apple. Obviously. This thing has, just been moving up. Now, earnings is also, I think, was it on the 4th? When is earnings? Come on, let's see. Yeah, on the 4th, after the market. So tomorrow, after the close. So yeah, that'll be a nice 1-2 punch with the FOMC and Apple. Now, again, anything goes. I think that if I look at the chart and based on the Moxie indicator and its technicals, this thing looks like it's getting kind of weak. Looks like it's topping out. Looks like it could use a significant pullback at least. And yeah, it just looks like it's really pretty far up there and getting stretched. However, anything can happen to earnings. It could go up on earnings, just like Meta. But if it does go up, we'll have to see how long it can actually stay up. That's kind of where I'm looking at. So anything goes, even though it looks like it's getting a little bit weak. But it is up there, and I honestly wonder how long this thing can stay up there. NVIDIA, another big name. And look, it's coming up right into its previous high. So a couple areas of resistance right there. And it has been such a big mover. You can see here it's pretty much taking a break. So Amvest, that's kind of what I was talking about with Walmart. Wouldn't short Walmart. It looks like it could just use a bit of a break, and it could be something like NVIDIA. Much slower, but kind of like that, to where it just keeps kind of moving up, and any rest or dip ends up getting bought. But again, this thing is pretty darn up there. If we look at the higher time frame, this thing is up there. So there's a big gap here, and it's pretty high up here on the weekly chart. So again, I kind of wonder, how much further can this thing go, and how long can this thing stay up there? And then let's see, Meta, the other pretty strong one, and again, it's way up there. You talk about deja vu. Look at this. The last time I had earnings, big move up there. But what did it do? It was outside of the 3rd ATR. It jumped off the 8 EMA. Now, yes, this one was shortable for a little bit, but also to my point is, you try and short an uptrend. Well, yes, you can short it for a bit, but look, it just resumes its uptrend. So this is why, saying don't try to short a pullback unless you are going to be very, very nimble. If you think that there's going to be a big move or like really an implosion, got to be careful about that. But look, same kind of thing. It's basically the same situation, same kind of jump up. So I would be looking at this and saying, even if it's going to still be bullish, it could use a pullback. It could just use a break, a rest. It's got to come back down to its levels. And so that's going to put some downward pressure on the market. And then I look at, let's see, Google. Google's not doing much, And in fact, if we look at the hourly chart, what do we got? We got the hourly Moxie indicator below 0, and we had price over the 50s. So that's an inverse trampoline move. So that looks kind of weak. And again, kind of a gap here between price and the daily 50. So Google hasn't really been helping the market. And then we look at Amazon. Now, Amazon had earnings, and in the overnight, it went up to I think $120. I mean, it was a huge move. But then I think more news kind of came out as they were doing the conference call, and it came right back down. And then now you can see here clearly back down. So Amazon's not really doing much to help keep the market up. And then we have, let's see, I don't think I did Microsoft yet. Yeah, Microsoft up here, and again, look where it is. It's just getting close to its previous high, and there was a resistance there. It's getting very close to those areas. It looks also kind of like Meta. It's very high. It's up here, 30 ATR, big gap here, kind of similar to the stuff back here. So, it too looks like it's high and could use a pullback. So a lot of these things look like, man, I'm just not sure how much further they're going to go. The market seems ripe for a pullback, for a move down. We'll see if the FOMC is going to be that trigger and really kind of get those wheels moving. The UVXY looks like it is ready to go to the upside. So yeah, we're just kind of seeing a whole bunch of things that for the most part seem to be aligning to the downside for the market. If it goes up, I feel like it might be temporary. Let me kind of show you that example, because do you guys remember when we had Jerome Powell say something before? I think it was before the FOMC. Forget what he said. Yeah, I forget what he said about it. Maybe inflation or something. But like this thing, that crazy move. I mean, that thing went straight up. But what happened? Well, that was a flash in the pan, and it was an inverse trampoline move too. Look, Moxie indicator below 0, price above the 50, inverse trampoline move. And what happened? Came down, bounced a little bit, and then just imploded. So that's what I'm saying. That if the market goes up, we got to be careful that it may not be real, may not be legitimate. It might just be a sugar high, based on whatever he's going to be saying. But other than that, yeah, things look like they should be kind of trending downward. Yeah. Anyway, let's see. Yeah, Thunderfen. Let's see. Odds that Yellen rolls out with another surprise press conference to seal the show from Jay Powell. Your guess is as good as mine, honestly. Like, we have no idea what they do. We don't know when they're scheduled. We have no idea, and we'll see, because this whole talk about the debt ceiling, like every time we talk about this with the debt ceiling, they always do extend it and fix it and make it go higher, which it's not great. I mean, this isn't great, but they're not going to we're not going to default, at least not yet. So I'm sure the debt ceiling is not going to be an issue, but I think we have bigger fish to fry and bigger things that are, coming down the pike with all this kind of stuff. So we'll see if they're going to distract with the debt ceiling. As I said, I think there are other things that the market's going to be paying attention to. And Jerome Powell today is probably going to be something along those lines that we should be definitely paying attention to. Yeah, Thundervan, I know it was a rhetorical question. That's what happened last time. So yeah, we'll have to see what kind of circus that there's going to be this time. All right, guys. Well, unless there's any questions from YouTube, Facebook, anything else like that, we're going to wrap it up. There's just not much to really kind of do today. Anything I say right now could just get blown out of the water based on how the market reacts to Jay Powell and what his comments are. Pay not only attention to the report that comes out, but I would listen to his Q&A session, because we'll kind of usually get an initial reaction from the report that comes out, but then Jay Powell starts speaking, questions are asked. I think last time he said deflationary, 12 or 15 times, and the market was really liking that. And so everybody basically hangs on every word he says and however many times he says it. And so, just kind of be aware of that kind of stuff, and differences in language, differences in words from last time to this time. Does he say deflationary at all? Maybe he's learned his lesson on that and he's not going to say that at all. A stagflation. Are we in stagflation? So there could be a lot of things that we need to pay attention to, and we'll just have to see what the market does. And not only is it today's reaction, it's tomorrow's reaction is probably going to be the most important, because tomorrow's reaction is when everybody then really hears what he says, thinks about it, comes up with a game plan, and tomorrow is typically going to be the big day to tell us which way the market's going to go. So, all All right, everyone. You take care, and